Question 731. The majority of electrical outlets in homes supply volts of power. A 50, B 110, C 500, D 1000. Correct answer is B 110. While you might still hear people refer to them as 110-volt outlets, the official standard for residential circuits in the US is 120 volts. Appliances are designed to work within a small fluctuation around this nominal voltage. Higher voltage outlets, like 240 volts, are typically used for large appliances such as electric dryers, ovens, and central air conditioning. Question 732. The terms and conditions of the sale of a home property generally have an impact on the properties. A. Appreciation. B. Tax rate. C. Price. D. Depreciation. Correct answer is C. Price. Appreciation is the increase in value over time, driven by market forces, economic conditions, and property improvements, not typically the specific terms of one sale. The property's tax rate is set by local government authorities based on assessment value and local budgets, independent of the sales terms between private parties. Depreciation, in real estate, refers to a loss in value over time due to wear and tear, age, or obsolescence. It's an economic concept or an accounting method for tax purposes, not directly influenced by the specific terms of a single sale. The terms and conditions of the sale of a home property directly impact its price. Factors like financing terms, contingencies, and closing costs can influence the final sale price. For example, financing terms. A seller may be more willing to negotiate the price if the buyer offers a larger down payment or a stronger financial profile. Contingencies. If the sale is contingent on the buyer obtaining financing or selling their current home, the seller may be more willing to negotiate the price to ensure the deal goes through. Closing costs. The buyer and seller can negotiate who will pay for closing costs, which can affect the net price the seller receives. Speed of close. A buyer willing to close very quickly might be preferred by a seller, even at a slightly lower price, if time is of the essence. While the terms and conditions of the sale can indirectly influence the property's appreciation, tax rate, and depreciation, the most direct impact is on the price that the buyer and seller agree upon. Question 733. The term megalopolis refers to A. Cell phone providers. B. Large states, like California or Florida. C. Utility companies, like Southern CA Edison or PG&ED. A group of cities and its surrounding suburbs. Correct answer is D. A group of cities and its surrounding suburbs. Megalopolis refers to a large, densely populated urban area formed by several cities merging together. It's often characterized by sprawling suburbs, interconnected transportation systems, and a high concentration of economic activity. The Greater Los Angeles area is a prime example of a megalopolis in California. It encompasses several major cities, including Los Angeles, San Diego, San Bernardino, Riverside, and Orange County, as well as numerous suburban areas. This vast urban region is home to millions of people and is a major center for business, entertainment, and culture in the United States. Some other megalopolis in U.S. The Northeast megalopolis, or Boss Wash, stretching from Boston to Washington, D.C. The Great Lakes megalopolis, Kai Pitts, from Chicago to Pittsburgh. Question 734. A 17-year-old soldier in the U.S. Army decides to try to buy a studio apartment. The listing agreement he signs is A. Invalid. B. Valid. C. Illegal. D. Subject to challenge by his parents. Correct answer is B. Valid. In California, an emancipated minor has the legal capacity to enter into binding contracts, including those for real property. A contract entered into by a minor is generally voidable by the minor. However, specific circumstances can lead to a minor being emancipated, which grants them the legal capacity to enter into binding contracts. In California, common ways a minor can become emancipated include marriage, petitioning a court, enlisting in the armed forces. Since the 17-year-old in the scenario is a soldier in the U.S. Army, they are considered an emancipated minor. As such, they possess the legal capacity to enter into contracts, including a listing agreement for a studio apartment. Question 735. If a lease does not mention whether the tenant has the right to assign the leased property, then the A. Tenant can assign the property. B. Tenant cannot assign the property without the landlord's consent. C. Tenant cannot assign the property under any circumstances. D. Assignee must negotiate a new contract. Correct answer is A. Tenant can assign the property. Historically, and as a general common law principle, a leasehold interest is considered a form of property, and property rights are generally alienable, transferable. Unless expressly restricted by the lease agreement, a tenant has the right to assign their leasehold interest. California law. Civil Code Section 1995.210. B. California Civil Code Section 1995.210. B. Explicitly states, unless a lease includes a restriction on transfer, a tenant's rights under the lease include unrestricted transfer of the tenant's interest in the one lease. This means that if a lease is silent on the matter, the default is that the tenant can assign. The assignee steps into the shoes of the original tenant under the existing contract. While there might be a new agreement between the original tenant and the assignee, the core contract with the landlord remains the same, just with a different party fulfilling the tenant's role. Question 736. Which of these types of loan could have variable amortization? A. CalVet. B. Fannie Mae. C. VA. D. Any of the above. Correct answer is D. Any of the above. The concept of variable amortization typically refers to loans where the interest rate can change over time, leading to changes in the payment amount and how that payment is applied to principal and interest. This is most commonly associated with adjustable rate mortgages, ARMs. CalVet loans are specific to California veterans and often feature competitive fixed interest rates. While some programs might have adjustable features, the general characteristic of a CalVet loan is not variable amortization. Many are fixed rate. Fannie Mae is a government-sponsored enterprise that purchases and securitizes mortgages from lenders. They set standards for various loan types, including adjustable rate mortgages, ARMs. Since ARMs have interest rates that adjust periodically, their amortization schedule, the breakdown of principal and interest payments over time, will also vary. Therefore, Fannie Mae does deal with loans that have variable amortization. VA loans are guaranteed by the U.S. Department of Veterans Affairs. While many VA loans are fixed rate, VA also offers adjustable rate mortgages, VA ARMs. With a VA ARM, the interest rate can change, which in turn causes the amortization, and therefore the monthly payment, to vary over the life of the loan. Since both Fannie Mae and VA offer adjustable rate mortgages, ARMs, which inherently have variable amortization due to changing interest rates, the correct answer is D. Any of the above. Question 737. In Southern California, most escrows are performed by A. Attorneys. B. Separate escrow and title companies. C. Property managers. D. None of the above. Correct answer is B. Separate escrow and title companies. Here's a breakdown of the typical practice in California. 1. Independent escrow companies. Southern California predominantly uses independent escrow companies. These are specialized, licensed, and neutral third parties whose sole business is to facilitate the closing of real estate transactions. They are regulated by the California Department of Financial Protection and Innovation, DFPI. 2. Title companies. While title companies primarily provide title insurance, they often have an escrow division or work very closely with independent escrow companies. In some cases, especially in Northern California, the escrow function is more frequently handled directly by the title company's escrow department. However, the question specifically asks about Southern California. 3. Attorneys. California is generally considered an escrow state, not an attorney state. While attorneys can be involved in real estate transactions, and it's often advisable to have one for complex deals, they typically do not perform the escrow function as a neutral third party holding funds and documents in the way a dedicated escrow company does. In attorney states, attorneys directly handle the closing process. 4. Property managers. Property managers handle the ongoing management of rental properties, including collecting rent, arranging repairs, and dealing with tenants. They do not typically perform escrow services for the sale of property. Therefore, the vast majority of real estate escrows in Southern California are handled by licensed, independent escrow companies, often working in conjunction with title insurance companies. Question 738. Of these mortgage providers, which one generally offers the highest loan-to-value ratios, LTV, for conventional loans? A. Savings banks. B. Private lenders. C. Life insurance companies. D. Commercial banks. Correct answer is A. Savings banks. While savings banks, commercial banks and insurance companies are the largest providers of real estate loans. Savings banks best known for specializing in funding home mortgages. Traditionally, savings banks, or savings and loans, were specifically focused on residential mortgages. This specialization often led them to offer highly competitive terms for conventional loans. This included providing some of the highest loan-to-value, LTV, ratios in the market. While commercial banks also offer conventional loans, savings banks historically aimed to make homeownership more accessible. They often did this by structuring loans that required smaller down payments. This practice resulted in higher LTVs for borrowers. Question 739. The state's Fair Employment and Housing Act is also called the A. Rumford Act, B. Holden Act, C. Unruh Act, D. Employment Protection Act. Correct answer is A. Rumford Act. The state's Fair Employment and Housing Act, FEHA, is a comprehensive California law. It provides broad protection against discrimination and harassment. This protection extends to both employment and housing. While FEHA is its formal name, it encompasses and was built upon earlier fair housing efforts. Specifically, the Rumford Act was a significant precursor focusing on housing discrimination. The Unruh Act also plays a role, prohibiting discrimination in all business establishments, which includes housing providers. The Rumford Act, 1963, was California's primary fair housing law that prohibited discrimination in the sale, rental, and financing of housing based on race, color, religion, national origin, or ancestry. It was a crucial predecessor and its principles are largely incorporated into FEHA's housing provisions. The Unruh Act, 1959, broadly prohibits discrimination by all business establishments, which includes real estate businesses and housing providers, based on various protected characteristics. The Holden Act, 1977, specifically addresses housing financial discrimination, redlining. The FEHA incorporated and expanded upon the protections of the Rumford Act. Question 740. Gordy's 10-year-old Chevrolet broke down again, and in disgust he said to his friend, Steve, I'll sell you my orange Chevy for $10. When Steve produced the cash and asked Gordy for the keys, Gordy refused to accept the money and said he'd only been joking about selling the car. If Steve sues his now ex-friend Gordy to go through with the transaction, the court will base their ruling on A. Whether a reasonable person would have believed Gordy's offer to sell his car for $10 was genuine or a joke. B. Whether Steve had believed Gordy's offer to sell his car for $10 was genuine or a joke. C. Whether an automobile dealer would appraise Gordy's car with a value of $10. D. Whether the car would be able to run the next time Gordy tried to start it. Correct answer is A. Whether a reasonable person would have believed Gordy's offer to sell his car for $10 was genuine or a joke. This scenario touches upon the legal concept of offer and acceptance in contract formation, specifically the element of contractual intent. For a valid contract to exist, there must be a genuine offer and acceptance, and both parties must have the objective intent to be bound by the agreement. Courts generally apply the objective theory of contracts. This means they look at the outward expressions and actions of the parties, rather than their secret, subjective intentions. The question is not what Gordy privately intended, but what a reasonable person in Steve's position would have perceived Gordy's intent to be. If a reasonable person would have understood Gordy's statement as a clear joke or made in jest, then there was no genuine offer, and therefore no contract. However, if a reasonable person could have legitimately believed it was a serious offer, even if impulsive, then contractual intent might be found. The extremely low price, $10 for a car, even a broken one, would be a key factor in assessing reasonableness. While Steve's belief is relevant, the court won't solely rely on his subjective belief. The standard is objective. What would a reasonable person have believed? The car's operational status is irrelevant to whether an offer to sell was genuinely made and accepted. Therefore, the core issue the court will examine is the objective manifestation of intent, judged by what a reasonable person would infer from Gordy's words and actions.